We are getting some record moves in the FX space this year, and the ECB raising interest rates was the big news story this week. While I do follow the ebbs and flows of the bond markets, I pay little attention to the hysteria that ensues pre and post central banks announcements. I let the rules and guidelines of the wave principle guide me day in and day out, whatever the so-called high impact economic event is. In front of you is a chart of Euro US dollar, and since the late August low, the price action has been very choppy and range bound, which to an Elliottician suggests a correction is unfolding, i.e. a counter trend move. These charts are from the Currency Pro services early on Monday. We went into this week's trading on the lookout for a low to form, but as the week drew on, our excitement was increasing. Let me share with you what I mean. So the first thing to be aware of here is we have labeled this A and B, and we're looking for a wave 2 correction to unfold. Corrective price action back to back suggests the flat pattern or a triangle is underway. The triangle cannot unfold in the wave 2 position on its own, and therefore the flat pattern is the preferred outlook. Under this scenario, we're looking for the wave B of that pattern to end, and from there a C wave rally should unfold in 5 waves, and we'd expect price action to test or push above the wave A high, which comes in at 10090. So the dashed lines on the chart are indicating that we're considering an ending diagonal. We would have been explaining this to our subscribers through our video posts and often in the written text. But at this juncture, there is the idea that price action may be a double or triple zigzag, but as the week continued, we got more price action, and with more price action comes additional information. So a few sessions later, we did upgrade the ending diagonal pattern to preferred status. It's best to wait for enough information to count the 5 waves in place and not to develop a habit of labeling these patterns too early. While they tend to be quite a common pattern in the Forex markets, they are by no means as common as the impulse pattern. But because of their excitement or what they bring with it, it's possibly that's the reason a lot of Elliotticians get conned into labeling these patterns too early. And if you do that and you've been proved wrong a number of times, your confidence in trading them can suffer. So if I could give you one bit of a warning, is have the patience to be able to count 5 waves in place, and then you have a key level to work with, which is the most important thing that we get from the wave principle rules and guidelines. I know I am wrong if price action prints below 98.64. I know where I want price action to go above 1.0090. This is an ending diagonal which calls for a swift and dramatic reversal, and that's what makes it one of my favorite Elliott wave patterns. You want to see the price action accelerate higher, because when that happens, that is telling you you're right, that was an ending diagonal, and now the market is pushing higher in the next phase of whatever the higher wave degree pattern is. So here we're working with the flat pattern, and we know where we want price action to go. So moving on now, again, we see we're getting some impulsive price action to the upside. We still only have 3 waves from 98.64, but we have a key level to work with. So bullish against this level, and we're telling the subscribers breaking out of the 2-4 trend line is the next objective, and then that would be bullish evidence that this could be the swift reversal unfolding. And not long after that, and following the breakout, we got a nice impulsive surge, a corrective pullback. We came back, nearly tested the trend line from that diagonal, that 2-4 boundary, but price action then rallied higher again, all within the guidelines of this pattern, the ending diagonal calling for a swift and dramatic reversal. So as you can see, pre-announcement or any of these economic events, we can often have a pattern unfolding that is giving us guidelines of where price action could go. Not only that, how the price action could unfold if that is the case. And you can see that price action has come up now and pushed above 10090. We'll continue to see if this C wave has higher to go, but at this juncture, the swift and dramatic reversal retracing 100% of the ending diagonal pattern has ticked all the boxes for the guidelines of the ending diagonal pattern and satisfied our expectations. It's now on to the next pattern, the advance from 98.64 and the next phase of Euro US dollars pattern development. If you have any questions or queries, don't hesitate to email in. We'll get back to you. I hope you've enjoyed this video and gotten some lessons out of it. Don't be afraid of the ending diagonal pattern. Keep an eye out for it, but have the patience to wait until you can count those 5 waves in place. When that happens, you have a key level to work with and you should know what to expect. My name is Michael Madden. Thank you for watching. I look forward to speaking to you all again soon.